own a few unusual items, and I wonder if you could explain. You own exchanges, for example.
Yep.
So you own ICE, Intercontinental Exchange, which owns the New York Stock Exchange, where we are right now. You own Deutsche Börse. What do owning exchanges have to do with inflation?
If you were to think about the ripple effects of what inflation would cause throughout the broader economy, but also for individual businesses, it impacts currencies, interest rates, soft commodities, hard commodities, and the Intercontinental Exchange, Deutsche Börse, the CME, they operate very large derivatives exchanges, which allow people to both hedge and speculate on all of this instability and volatility that might arise as a function of inflation. But if you were to step back and look at what these businesses are, they're basically financial supercomputers matching buyers and sellers. So if there's a couple $1 trillion more notional derivative volume, the exchanges spend very little money to basically earn that revenue, and a lot of that converts into operating income.
Yeah. I wonder, you were talking earlier about this concept of capital light as a way to look at inflation. I wonder if you can explain that. You seem to be emphasizing companies that are doing outsourcing. This is a sort of another branch that you're investing in, and that's going to save money. And once you get revenues up, once you have inflation, revenues go up and the companies benefit because they don't have a lot of spending in the middle. The goal goes to the bottom line. Explain this capital light model. And I wonder if we could put up that full screen so that'll help explain this.
So the number one problem with betting on a direct binary bet on inflation or commodities is that, let's say you were to look at the upstream producers of copper or oil or gold. They spend a lot of money to earn their returns, and they lever it up with a lot of balance sheet debt. And so when the cycle, if you're early or if you're late or if you're wrong, you can impair a tremendous amount of capital going into these capital-intensive businesses. So we focus on businesses that have a very asset-light, highly scalable, operating leverage type of business model. And as you mentioned, some of these do provide outsourced data, contract research services where, because of their extensive libraries of data, their facilities and their staff, they can do it more inexpensively and better than a lot of the incumbents can do it internally.
Yeah, you know, Tom, we used to have a word for this, operating leverage. It's where essentially companies would cut costs in the middle, and we saw this during COVID. They cut real estate costs, cut firms that are out there, cut expenses overall, and once the revenues go up, you see the move. It all goes to the bottom line here. It's called operating leverage, and he's sort of describing this to a certain way, although capital light means essentially you eliminate a lot of these middle costs by outsourcing.
Right, and in two cases here, the renters, if they're going to have to get more gold out of the ground, it's on them to produce the capital and also the people. And then the other things like trading in commodity futures, if that happens to increase, it's all about leveraging technology. So some great companies to think about. I think the bottom line here, as we continue to look at the Fed and what the Fed is signaling regarding inflation, most advisors don't believe it. The number one fear that advisors have today is inflation, followed closely by high stock valuations. So they're gearing up to protect their clients from inflation and looking at these types of options in commodity ETFs.
I want to go back to this capital light model because I was looking, James, for some examples here. I think your biggest holding is Charles Rivers Labs, and there's a good example of essentially the capital light model. I wonder if you could explain that. Charles Rivers essentially does lab work for pharmaceutical companies. How does that fit in with this concept of capital light and inflation?
Correct. And think about all of the arguments about, is inflation real? Have you experienced inflation? I think two areas that you'd be pretty hard-pressed to argue against being inflationary over the past decade are higher education and healthcare. And within healthcare, it's really hard to access this and play this because of the capital intensity, because of the complexity of the healthcare payment system. But Charles River Lab, they basically are a contract research organization where they streamline the very early stage safety assessment and discovery processes. And they can do it more cost effectively and they can do it more rapidly than even the largest pharmaceutical, biotech, academic, and government agencies out there. And so in an inflationary world where there's price pressures all throughout the healthcare ecosystem, A, they're a very low component of the overall cost structure, but B, they have the facilities in place, they have the networks, they have the databases where it doesn't cost them very much to put a lot more throughput through their existing system.
So labs have all, healthcare companies have all these fixed costs, and to the extent that you can outsource some of them, for example, lab work, to a company like Charles River, that obviously reduces that middle part, all the expenses, and that is going to benefit once people have revenues higher. I mean, I'm trying to connect the dots here to the inflation story.
So let's say that Pfizer, just to throw out a mega cap pharmaceutical company, if it's getting more and more expensive to hire people to do your internal safety assessment and discovery, if to get the data is becoming more and more expensive, if getting the lab equipment is getting more and more expensive, it's that much more beneficial for you to outsource this to the industry leader. And to the extent that there's more and more demand in an inflationary environment, Charles River is going to benefit both through higher volume and higher pricing, kind of having that 1-2 punch, to your word, operating leverage on the upside.
Yeah, and there you see Charles River, which has had a spectacular year, partly obviously on COVID and
Sure.
additional needs for more medical research, but also perhaps partly on that inflation story, that they're the beneficiary of outsourcing in the pharmaceutical industry.
Yes, and pricing pressure flowing through the system, they're a nice place to kind of capture that inflationary pressure without having too much risk.